Hi everyone, welcome back to this week Weekly Market Update. So, as usual, let's take a look what's happening in the market and things to watch out for the coming weeks as well. So, as you can see that in the market itself, from the US index, Dow has closed 100 points to close at a record high, and of course, another two indices also rally after Fed announced their rate cut of 50 basis points last week. So, but the thing is that even with rate Fed cut, the movement in the market seems not that, have a huge spike in the market movement. I think that is because a lot of anticipations has been building up, has been predicted what is going to happen for Fed 25 basis point or 50 basis point, resulted that the market don't really rally quickly or surprise movement, unlike what happened to the Chinese government. Alright, so we can see on last Monday, China Central Bank actually stepped in and sudden announced of rate cut. As you can see, the sudden move actually spiked the whole economy of Hang Seng Index and China A50 Index. As you can see from here that with Chinese governments going to implement a lot of stimulus to help their economy in spite the Chinese economy and the Chinese stock market. So I think a lot of attention has been into the Chinese related stocks, and of course one of my lover will be JD, which I'll be talking about it. So we'll be revisiting this JD chart later as well in this video. Not only on that, there will be one more counter which I also introduced of doing dollar cost averaging, and right now it's kind of like related to the counter as well. So we'll look into it later on. So this is what happened on last week. Coming week will be the heavy economy data announcement again. So like non-farm payroll, unemployment rate, this kind of data, which is very crucial at this point of time, mainly is because after the rate cut, all this data will come in very sensitive to it, because it will show whether does it support the Fed decisions to do a 50 basis point cut or not. So pay attention to the coming week economy data. As for the Chinese economy, right, it will be a closed economy. I mean, you'll be closed on next week. Maybe it's because of their national day. I think there's some holiday for them as well. So they will be closed for the next 2 to 3 days, if I'm not wrong. You can read it up. So let's look into the chart right now. So this is what I'm looking at right now. For Dow Jones Index, today I just do the video. As you can see that even though with US index rally, after the Fed 50 basis point cut, but to me I feel that the momentum behind this uptrend appeared to be weakening. That means I don't see a strong huge spike just like what happened to China E50 or Hang Seng Index, right? And that's kind of like ticklish on the movement of the upside, which I don't really convince into it. Perhaps a pullback or a little corrections will bring the Dow Jones to be more convincing on the upsides after a slight pullback. So my view is that keep an eye on the support level between 42,000, 41,850. These two key level support. If any candlestick going to show a breakdown next week, it might be because of the economy data came in that doesn't align to what the Fed decisions of the 50 basis rate cut. It may actually spike down by next week, and we can see that after breaking 42,000 or 41,850, the market may continue to drop. So monitor closely. Of course, at this junction, I will not go long. Why? Because let's look into the next chart for S&P 500. It's also under the US index. So for here, we can see that there is actually a bearish divergence forming based on the RSI and the price, right? So because at this junction, at this level, with a bearish divergence forming, I will be more cautious, and I don't want to, be caught off guard, long at the all-time high, whereby the market, to me, is the movement is like weakening, the momentum is like weakening, right? And that is why I will be more cautious. And if let's say I believe rate cut does benefit the equity market, I will look for corrections before I enter at the long side, on the buy side. Alright, so that's my view for Dow and S&P 500. So on top of that, let's look into the Chinese index. Why not? So HSI, then you'll be looking into, yes, as you can see, this is the huge movement of spike that I wanted to see in the US market when Fed announced their rate, right? But I think because of a lot of anticipations, that resulted that the huge spike, we cannot see the huge spike, or perhaps it's already priced in. We will never know. But so for Hang Seng Index, we can see that I'll be calling a few key level. I mentioned this is a very important support area, right? So the price pullback, this candlestick is a very very important candlestick, which I mentioned also. If you have not been watching my video, can go and watch back. It's in the YouTube. As you can see that, you see, watch out for the weekly candle pin bar. Break below may not show a good sign for HSI. So since then, the price has been going higher, and then it spike up. Alright, so what is my take for Hang Seng right now? So my take for Hang Seng is that, yes, Hang Seng is that skyrocket with last Monday China rate cut announcement. On the weekly chart, we can see that it seems like it's been resisted by the 200-day moving average. But I feel that both Hang Seng and China has been badly oversold. And I don't see this 200 days weekly moving average is a resistance to them. I'm looking the positive side that it may penetrate or break above these 200 days weekly moving average anytime soon. But before that, we may see some slight pullback or a mini pullback, revisit around the 20,000 level first before it actually break above. We will never know. But nevertheless, I am bullish on the Chinese economy at this point of time until further announcement from the Chinese government stepping in and say, oh, they feel that it's over reduced, they're going to pull, rate hike back. But I don't think this will happen. I think it will be cut money, pump in. They want to boost up the economy. So for that case, I will not be doing any short-term shorting on Hang Seng or China A50. I'll be more on structured planning for the upside when to look into the buy signal or buy price instead. Right, so that's my view for Hang Seng. Let's look at China A50. So for China A50, okay, so this is China A50. Let's take a look at the weekly chart as well. So so for the weekly chart, I'll be talking about upside as 10K as a major support and coffee candle. This is 12 Feb. I think it's around here. Alright, 12 Feb. So 10K is the major support. 2nd March, I'm saying that because I think Chinese government talk about it, so we can look at some upside right now. I always bias on the upside when it comes to that low by then. It's just that when will the white knight step in, which is the government. So right now, this huge 18% upside for China A50, we may see some pullback around 13,000 before it go to the next resistance around 14,000 to 14,250, which is the Fibonacci of 38.2%. But nevertheless, we may not see this mini pullback. We will never know. Right, so you want to stay safe, you can wait for a pullback, or otherwise you can chase if you think that China A50 is really oversold. Chinese want to boost their economy. I think it may continue pump, go higher and higher. Right, so next counter we'll be looking into, firstly, is the counter which I mentioned. It's actually ST Laurel. As you can see, I've been since 2023 June, I've started to build this DCA by then. There's 3 bullets I'm looking at, 190, 150, 120. But when it comes to the critical support zone below 100, that is another level that I'm looking at as well. Whether I want to continue buying to average my price, or should I get out the whole company instead. But looking at ST Laurel, I know their revenue is affected because of the consumer, right? Because of the spending power in China, and that is why um, right now with the Chinese step in, I'm looking at 3 points for ST Lauder, mainly because of the bullish divergence forming, the China rate cut, bring back the consumer spending perhaps, because their rate cut make their life easier, they are willing to spend on the luxury brands, and lastly, the price reached the critical support level between the 80 and 100s. I have looking, or I have already entered by now, into this fourth bullet or fourth dollar cost averaging to bring down my price, my entering price. So this is one of the counter I'm looking into it. Will it bottom from here and then spike up after that? You'll never know. So just be a smart investor, plan for your next move always. Alright. So next counter we'll be looking into will be NIO. Alright, NIO is also Chinese related company. Today most likely we'll be talking about Chinese related company because of the big announcement from Chinese side, right? So NIO used to be, a Chinese Tesla, has been badly beaten off. Right now it seems like reversals coming up a bit above the 50 days moving average right now, as you can see, with high search volume. Price around 650 last closing. I'm looking for it to first return back to $10. Then we'll talk about it. Alright. So if you believe in this Chinese NIO, you may consider looking at the first resistor at 10. Remember that. Alright. Last counter for today. If you're a high risk taker, only for high risk taker, you may consider about it. It's actually Gao 2. Alright, Gao 2. Gao 2 is actually an education industry. It's heavily beaten, right? Since how many hundreds dropped down, I think because of Chinese government stepping. Alright, a lot of things happened on the Chinese education, but then as you can see, a lot of Chinese related stocks all spike, right? Since all Chinese stock related spike, maybe it may spill the milk to the education industry as well, or the Chinese government can just one word save this industry. So there is of course related shares as well, not only of Gao2, there is like TAL, there is like EDU. They are all education industry, but I choose this because I'm looking a very high risk play. I'm looking at 2 flop, 3 flop, whether can we multiply it easily and faster within the next few weeks within this momentum that is running right now. So if you're a high risk taker, you may consider this, but this is really, really high risk. Okay, so that's all for my this week weekly market update. So as usual, if you like, remember to share and like my video, and I will see you guys 1 or 2 weeks later. See you, bye bye.